Fractional stocks or fractional shares refer to a portion of a whole share of a stock, rather than purchasing a full share of a company's stock, which can sometimes be very expensive, especially for high-priced stocks. Investors can buy a fraction of that share. This allows investors to invest in stocks with smaller amounts of money. Fractional shares make it easier for investors to enter the stock market without needing to buy whole shares, which may be beyond their budget. This democratizes investing, allowing people with lower capital to build a diversified portfolio. With fractional shares, investors can spread their investment across multiple companies and sectors without needing a large total investment. For example, if you have $100 to invest, you could buy fractional shares in several high-priced stocks instead of just one. Many online brokerage firms and investment platforms offer the ability to buy fractional shares. These platforms typically allow users to specify the value amount they want to invest, and the platform calculates how much of a share that amount represents. Investors who own fractional shares are typically entitled to dividends in proportion to the number of shares they own, meaning that even fractional shareholders can benefit from corporate profits distributed to stockholders. Some companies and funds may allow investors to reinvest dividends to purchase additional fractional shares, which can help grow their investment over time. In summary, fractional stocks provide a flexible way for investors to access the stock market, particularly benefiting those who have limited funds, yet want to invest in high-value companies.